QL Resources said its wholly owned subsidiary QL Oil has commenced arbitration proceedings against two Indonesian firms to resolve disputes relating to a master JV agreement signed by the three parties in 2006. QLO filed the notice of arbitration against Hang Ting and PT Pipit Citra Perkasa at the Singapore International Arbitration Centre on Thursday, said QL in a BOS filing. Under the MJVA, QLO and HT formed a JV company known as QL Mutiara Singapore, which in turn owns a 95% stake in plantation firm Pipit Mutiara Indah, with PCP holding the remaining 5% stake. QL said PCP and HT are affiliated companies owned by the family of the Cristiano Kandi Saputro. The group said that in August 2021, PCP initiated a lawsuit in Indonesia against PMI, QL Mutiara, as well as QL director Chia Siong Fat in his capacity as a director of PMI for alleged mismanagement negligence and sought compensation amounting to about 221.87 million ringgit. PCP claimed the negligence caused PMI to suffer 8 years of continuous losses since the commencement of its operations between 2012 and 2020. In December 2021, PMI, Chia and QL Mutiara obtained an interim injunction order against PCP to restrain PCP from continuing with the Indonesian proceedings. However, PCP had, in breach of the injunction order and the MJVA, deliberately proceeded and continued with the Indonesian proceedings until around March 2022, claimed QL. In March 2022, PCP applied to withdraw and annul the lawsuit against PMI, Chia and QL Mutiara. QL says that QLO is now launching the arbitration to seek relief from HT and PCP and specific performance orders to compel HT and PCP to comply with their obligations and duties under the MJVA, and is also seeking damages from the two firms. QL says that apart from the potential damages and corresponding legal costs, it doesn't expect the arbitration proceedings to have any other material impact on the company for FY 2024. Fraser and Eve Holdings' net profit increased 1.9% year-on-year to 99.4 million for its third quarter, driven by overall higher prices, margin and cost management, as well as contribution from Cocoland Holdings, which the group acquired in November 2022. However, earnings were partially offset by one-off non-operating items, namely impairment losses and writing down of inventories. Revenue for the quarter jumped 19% year-on-year to 1.33 billion from 1.12 billion thanks to robust festival sales, improvement in the F&B markets in both Malaysia and Thailand, recovery in export markets, and the additional Cocoland contribution. Heading into the final quarter of FY 2023, FNN is maintaining a cautiously optimistic outlook amid the volatility in commodity prices and foreign exchange rates and inflationary pressures on its costs and its impact on consumer demand. FNN said that it has purchased substantially its raw material requirements for the fourth quarter of FY 2023. Nevertheless, FNN said it will remain vigilant and proactively navigate this volatile and inflationary environment, leveraging on its diversified brand portfolio. The group said that it has taken a significant stride towards its vision of becoming a leading milk producer in Malaysia, with the recent groundbreaking ceremony of its integrated dairy farm in Gemas Negeri Sembilan marking the beginning of its journey into the upstream fresh milk sector. Sunway's property arm, Sunway Property, announced that its wholly owned subsidiary, Sunway Rawang City, acquired a 245-acre land in Kuang Rawang for 115 million cash. The acquisition and proposed development of the land will be carried out via a JV with Amal Resources for a proposed industrial tech park comprising factories, warehouses and commercial components, carrying a GDV of at least 2 billion ringgit. Sunway said that the acquired land offers excellent connectivity as it is situated adjacent to the Lata Expressway, as well as being just a 35-minute drive from the KL city centre and an hour away from points of entry KLIA and Port Klang. Sunway Property MD Sarina Chia says the group is thrilled to add this strategic parcel of land to its overall portfolio. She says the acquisition signifies its dedication to developing a future-ready industrial tech park that integrates technology, sustainability and innovation to meet the needs of modern businesses and add to its its ever-expanding industrial development portfolio. Chair adds that with a total land bank of 3,068 acres and a potential GDV value of 49.7 billion over a period of more than 15 years, Sunway Property is poised for sustainable growth. Vinvest Capital Holdings, which has initiated a lawsuit over the alleged loss of its 17.82% stake in EA Holdings, has included a 30-year-old stock market analyst from Ipoh as the second defendant in the suit. In a statement of claim filed on Thursday through Messrs. Wilson Lim and cited by The Edge, Vinvest said the analyst was recommended by EA Holdings after Vinvest acquired the 17.82% stake comprising 1.1 billion shares worth 23.21 million in November 2021. On Wednesday, Vinvest announced that it has initiated legal proceedings against EA Holdings over the matter, including urgently applying for the necessary prohibitory injunctive orders to stop further derogation of the company's rights over those shares. It added that the High Court on the day granted the company an interim injunction against EA Holdings. The company also said that the 1.1 billion EA Holdings shares was originally kept in a Maybank IB's CDS account for safekeeping and not used for trading. Vinvest claimed that sometime in May, the analyst suggested that the company open a second CDS account, and subsequently a second account was opened at TA Securities Holdings on May 22nd, and all EA Holdings shares were then deposited into the second account. Between June 23rd and July 11th, Vinvest noticed that all these shares had been sold on the open market via the TA Securities CDS account. The company claims that there had been fraudulent sales and invalid sales instructions to dispose of the shares at 0.5 cent per share, or a total sum of 5.486 million, and it did not mention who had given the instruction to sell the shares. Vinvest further said that it tried to contact the stock market analyst to no avail, and his whereabouts are unknown. Following that, a report was lodged with the Securities Commission, Police and Bursa Malaysia between July 17th and 21st. German Chipmaker Infineon said on Thursday that it was massively increasing its investment in its Malaysia plant while reporting slightly better than expected quarterly revenue in a semiconductor market where trends remain a mixed picture. According to Reuters, Infineon, whose chips are used in cars and data centers, reported third quarter revenue of 4.09 billion euros, up 13% from the same period last year and slightly above expectations of 4.05 billion in a company-provided consensus of analysts. According to Chief Executive Joshan Hanivak, the semiconductor market trends continue to present a mixed picture with both light and shade, namely that demand is high in electromobility and renewable energy, but low for consumer products like PCs and smartphones. For the full year, Infineon expects investments amounting to approximately 3 billion euros. One investment focus is construction at its site in Malaysia, where it said on Thursday it plans to build the world's largest 200 mm SiC power fab. The planned expansion of the Kulim fab is backed by customer commitments covering about 5 billion euros and about 1 billion euros in prepayments, according to Infineon, which said it would invest up to an additional 5 billion euros over the next 5 years. Ford and China's Chery and SAIC are among the first customers from the automotive sector, in addition to SolarEdge and 3 leading Chinese photovoltaic manufacturers. Hanebek says that with the Kulim expansion, the group will secure its leadership position in this market. The company expected the expanded facility, together with its plant in Villach, Austria, to generate annual revenues of 7 billion euros.